Okay folks, so we've got a lot to talk about. The CPI index report came out and it wasn't terrible, it did beat expectations, but not to the point where it would have been overly worrisome. Though it looks like investors are making the judgment call that the Fed isn't going to have to change their policy just yet. And as a result, we saw some money flow back into many of the ARK growth plays, the tech plays, and the Dow plays. Though this strength was offset by a lot of the short squeeze, screw the hedge fund stocks cooling off. Your GME, AMC, Clover, BB, and the other short squeeze runners from the last few weeks, many have broken into a deep downtrend all at once. There were some strong retail rallies this morning like your Annie and your Meds and Cents, but for the most part the show has at least been paused as far as many of these screw the hedge fund stocks are concerned. But we're going to be talking violently about what's going on with AMC, what the latest is, what the data suggests is going to happen, and some things to keep in mind with it. Because at the end of the day, don't forget that hedge funds lost roughly $6 billion since the start of May, thanks to a lot of these same stocks like GameStop, Bed Bath & Beyond, AMC, BlackBerry, and Clover Health. So it's certainly getting interesting, and don't forget that the heat is still on for them. And the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so let's go ahead and start with AMC and GME and the others. You can pin the sell-off today on many different things. Perhaps it's GME saying that the SEC was investigating them and other meme stocks. Perhaps it's more synthetic shares being dumped on the market. Perhaps it's momentum traders selling out of their positions, or perhaps it's because some major ETFs have gone and rebalanced and sold a lot of these meme stocks. In GME's case, they also had the negative catalyst of offering more shares. Luckily for the AMC apes, AMC has already offered all the shares they can under the current authorization structure. But the point is, have your pick at the reasons that all of these stocks cooled off today despite the broader market doing very well and a lot of the growth plays doing well. Whatever the reason, the facts are the same as they were yesterday. Hedge funds have lost tons of money on many of these plays and they want to turn that around. I know people like to roll their eyes when people are like, oh, hedge funds are really sweating these retail traders, but don't forget that hedge funds like Melvin Capital lost nearly half of their investments in Q1 after the GameStop squeeze. Obviously, there's a lot on the line here if hedge funds fail and they don't bring this down. The US government regulates it so that only accredited investors can invest in hedge funds, aka wealthy investors over a certain net worth. And when you consider losses almost 50% in hedge funds like Melvin Capital, these are funds that are losing very wealthy and powerful people's money, which means severe consequences. So absolutely, they are sweating this. There's no doubt about it. But anyways, the game is still in full swing and the victor has not been chosen yet. And obviously we've talked plenty about my thoughts on this and that the whole main crux of this issue is that short sellers do have to cover eventually, and based on how many synthetic shares they do or don't have, this can be less or more intense when that actually starts. You decide to short a stock, you do have to buy back those stocks eventually. There's no way around that. And of course, there is a ticking time bomb because short sellers can't hold on forever. But in terms of new information, well, you're starting to see a lot more acknowledgement of what's going on here. Fact of the matter is that naked short selling is very, very easy to get away with because it's very difficult to track. So it's very, very difficult to build a hard case of evidence of fraud against a lot of these institutions that engage in these practices. And as a result, not only is it hard to prosecute, but when you talk about it and you allege and you see the symptoms of it, people say that it's a conspiracy theory, which makes the whole situation even more frustrating. I want you to hear an interesting take from a former SEC lawyer who went and talked about this issue on CNBC today.
Companies like GameStop, AMC, all these meme stocks have brought naked short selling really to the forefront of the market's interest. This is something that's going on for a very long time in a small cap market and is very much a problem.
Mr. Frankel, a former SEC lawyer, says naked short selling is something that's been going on for a very long time and is very much a problem. But what do we hear from the financial media? Naked short selling is not as prevalent as you think. Naked short selling isn't that big of a problem. People just like to blame it for their stocks going down. Naked short selling is just a myth. We regulated that away. Why would you ever think that a hedge fund would break a law to make money? Hedge funds are all about philanthropy. Are you a moron? This is why they call you the dumb money. Always trying to blame other people for your problems, even though the evidence suggests that hedge funds caused a lot of them. What about cases being brought against naked short selling hedge funds?
You said it's existed for a long time. Is it rampant? Is it in small pockets of the market? Why isn't the SEC doing something about it if it is in fact illegal?
The short answer is I think it's difficult to find, and it's also not a sexy type of case. I mean, the fact is the SEC has not brought many naked short cases. I mean, they did bring one about 3 weeks ago, so in 2021, involving more than 90 naked short sales. Broker-dealer made $1.6 million in commissions. It took 4 years for the SEC to bring that case. 2012, case against the Wolfson brothers, same thing. It took the SEC 5 years to bring a case, and what they charged were stock locate issues, order marking, failure to borrow. We're not seeing charges of fraud or manipulation. I think the reason for that is these cases are hard to find, they're tedious to put together, and it really is a challenge for the SEC to bring these cases.
Very interesting. Unsuccessful previous cases. Even when going after parties the SEC is alleging is doing naked short selling, which are probably the most extreme and blatant examples, according to this interview, hasn't resulted in charges for manipulation nor fraud. One of the things that you have to understand is that government agencies, they don't have unlimited resources. And when struggling to enforce some rule violations, such as this, which is very difficult to prove and very, very difficult to bring a case against, well, if they keep losing those cases and it's difficult to enforce and it takes years and years and years to enforce, well, hey, maybe they're going to use some of those resources and divert them to enforcing other things where they can actually get results. Keep in mind, at the end of the day, a big argument from those who don't believe in the naked short selling narrative that no way would hedge funds break the law because the penalties are so big. Some potentially include jail time. The idea is that no hedge fund's going to risk that. Who can think about a situation in history where some very wealthy individuals manipulated and scammed tons of other wealthy individuals and tons of non-wealthy individuals? I can't think of anybody like that in 2008 or any other time throughout history. But no one would ever risk those sentences. But backing up a bit to that point of whether hedge funds are willing to risk those sentences and those fines, well, this SEC lawyer is going ahead and spelling out that when the SEC actually catches people, which is probably the most extreme of cases, still the SEC has struggled getting a correct verdict against those parties. So clearly something isn't adding up here. But I want to take a step back and talk a moment about why it's so important that I cover this. The reason is because naked shorting is a scam. If you're buying a stock and a hedge fund goes and naked shorts that stock, you just got scammed. They are devaluing your shares and dumping shares that don't even exist out of thin air. When you buy a stock, there's a contract in terms of how many shares outstanding are there, how many shares that company can issue. After that, you have to authorize them if they want to issue more shares on you. And when you buy a stock, you agree to what you're buying, a share of a company based on the total number of outstanding shares. When a fund goes and dumps a synthetic share onto the market, it's scamming you. And yeah, eventually the goal of them is to buy it back so that they don't get caught. But especially in the short term, you're being scammed. And when funds dump synthetic shares onto the market and then manipulate the media into getting you to sell your shares because, oh, there's too much FUD. I believed in the stock when it was going up, and now it's red, so I gotta sell. All my convictions gone. I didn't know stocks can go down just like they can go up. There's problems on both sides here. One problem is us as retail traders being too damn stupid to understand how this game is played. They know how to manipulate us. They push a little bit of negative FUD in the media, and all of a sudden it's like, oh God, Normandy is being stormed. It plays right into their hands. All of a sudden, all of our convictions are out the window. We as retail traders need to get our damn emotions together and stop falling for this. On the other hand, hedge funds need to start playing fair. It's fine to be a short seller. It's not fine to manipulate the media. It's not fine to lie about companies and spread that through misleading press releases that your short fund put out. And of course, it's not fine to naked short sell. It's totally fine to short companies that you don't believe in, but you have to be open to that loss. Honestly, I'm a strong believer in if you're stupid and you make a stupid decision in the market, you should lose money. Fine. If that's retail, fine. If that's hedge funds, fine. But if one party has illegally manipulated the situation, that's a whole nother issue. We need a fair and free market. We need a fair market and accountability for parties who make it unfair. As for the AMC stock, it looks like the ape community is strong, and we'll see who wins the psychological warfare. At the end of the day, retail shareholders own 80% of AMC shares, and those are just the ones that we know about. The CEO said that the number of AMC shareholders in the US is 4.1 million, and that the average stock holding for AMC is about 120 shares. And we can make speculations all day on how the hell it could even be possible for moves like the 700 million share volume being exchanged in a single day last week is even possible. When you only have 500 million shares in circulation and 80% are owned by individual small 4.1 million retail traders, we can only speculate on how that could be possible without the presence of millions, if not billions, of synthetic shares. But I think that at the end of the day, we'll just have to wait and let this story play out. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade, would like access to our private chat and daily morning briefings, you can learn everything about it in that link. Coupon code Battlefield75 will get you $75 off before checkout. If you're wondering what broker to trade these stocks on and would like a broker that actually cares about retail traders, well, Webull is also linked below. And that pretty much caps off the video. Have a great week, and I'll see you in the next one.